You, like many others, were a bit surprised by the MPC not moving in their most recent meeting. Where does it go from here then, the pound?
Well, through the remainder of this year, we see it lower, so we have a year-end target of 124. They will, of course, act on the 4th of August. That was pretty much said. I think the next phase is going to be about the actual macroeconomic impact from this. And certainly, I think the most extreme period in which we're probably going to get the worst element of that is data from the 3rd quarter and perhaps into the 4th quarter. And certainly the sentiment readings that we've had to date across the board does tell you that we're going to see some pullback in activity. And I think that, coupled with don't forget the broader global situation and our forecast of 124. It's not just all Brexit. And I think the markets have to readjust to, there are broader developments in the global economy that are going to become far, far more important, perhaps, for the direction of the pound than the day-to-day developments in regard to Brexit.
What are those? Because you talk about the world, and we've got the MSCI World Index here. It is beginning to lose momentum. It is back pre-Brexit. It's beginning to lose a little bit of momentum. This is BTV, hashtag BTV 2163, if you want to go and have a look at it. And you've actually sort of pulled this into part of your consideration. What are the other big proponents of risk for us when we look at the world? Well,
we're a bit dubious of this kind of risk appetite recovery, and it's fueled in part by the central bank expectations. Bank of England is going to ease. There's huge expectations about the BOJ easing at the end of this month. The ECB is going to extend its QE program, and the Fed is on the sidelines. Then you have growth in the United States has been better than expected. And don't forget China as well. The growth story, the figures we had last Friday, for example, were much better than expected. But I think all of that could unravel, or a lot of that could unravel quite quickly. For example, the BOJ. We don't expect anything significant at the July meeting. Now, given the fact that over the last week or 10 days we've had this big debate about helicopter money and this is the next big step, I think there's a lot of optimism priced into dollar-yen at current levels, and I think that's going to unravel quite quickly.
We'll get more of your thoughts on Japan in just a moment, Eric. Sticking with the UK, when we look at the underlying reasons to cut rates, and of course a lot of it is got to be guesswork for many people because we don't have the data. We have the sentiment indicators that you mentioned, but we don't have the data. Do you see the benefits of cutting rates? And I ask because Kate Barker, who used to be on the MPC, was here talking to my colleagues the day of the MPC, most recent MPC meeting, and she said we shouldn't be cutting rates right now. She said with a population that's not as young as it used to be, we're starting to learn a little bit about how it incentivizes people to save money, actually, if you cut interest rates, and if you cut interest rates over this prolonged period or keep them so low.
Sure, obviously when on the rate side of the story, you've got borrowers and savers, so there's going to be that impact. But I think certainly on a macro scale, there's a net benefit, I think, from it. But obviously, given the fact that rates are where they are, and in particular look at the yield curve in the UK and the move that we've had since Brexit in terms of the 10-year gilt yield, for example, it's been very, very considerable. But of course, part of that is the expectation that the Bank of England will move. Now, certainly 25 basis points from the Bank of England, or even if they did 50 and went to zero, I don't think it's going to have a massively beneficial impact given where we are globally. But I do feel they have to at least meet what the markets are expecting at this point in time. And of course, they have a legal mandate, and that's why they're waiting until the quarterly inflation report is in front of them on the 4th of August, so that they can explain exactly what they've done.